Hello there. My name is Mike Hale, and with me today is my business partner, Joshua Clark. And today we are going to be sharing how savvy Canadian real estate investors are using government backed financing to build wealth in today's market. Our company is New Homes Alberta, and we are brokered by EXP Realty.
All right, what if you could invest in real estate with higher leverage, lower monthly payments, and long-term cash flow, all while meeting the pressing demand for affordable housing? That's what we're going to take you through today using something called the CMHC MLI Select Program. So in the next 30 minutes, you're going to discover a little-known government program that could transform your portfolio and maximize your returns while also supporting community growth. Before we dive into that, we have to do a quick introduction so you actually know who we are and why we're credible to be giving this presentation. So who we are New Homes Alberta. So we are your one-stop shop for all things new homes and pre-construction in Alberta. Our team is 100% local to Alberta, which is very important, by the way. And we advocate for you, the buyer. So we do not represent any builders. Our loyalty is making your next investment or purchase as seamless and simple as possible. So we have a dynamic team, and our goal is to find exactly what you're looking for to make your home buying or investing process as seamless and hands-free as possible. So we run cash flow analyses, we do builder introductions, discounted pricings and incentives on projects, specialized mortgage experts, and much, much more, which we can get into later, but it's not about us right now. Of course, we just want to do a quick intro. So Mike, do you want to give a little breakdown of what your background is?
Really quickly, my name is Mike. I'm a realtor. In my past life, I was a former CPA, also the big bad tax man at Canada Revenue Agency, and also ran a digital marketing business for 7 years on top of that. I've lived in Alberta since 2008 with many, many years in Edmonton as well as Calgary. And what I'm really passionate about is helping investors make smart investments and protecting them from the devil that we call inflation.
He's the numbers guy for us and for our investor clients. So very handy. Now, I'm Joshua Clark. I'm born and raised in Calgary. I'm also a licensed realtor. I built a marketing company in university and ran it for about 10 years. I ended up running marketing campaigns to sell out projects for builders in 5 countries in places such as Tulum, Cabo, St. George, Utah, Toronto, Kelowna, and countless others. So after running these campaigns for these builders, learning the ins and outs of that, I got my license, and here we are. So what are we going to actually cover today? The CMHC MLI Select program is very complicated, and the ins and outs, you have to know everything about the application process and whether or not you actually can qualify so you're taking care of your investment. So we're going to start by doing an overview of the CMHC MLI Select program. We're going to discuss what it is, why it was created, and how it opens new pathways for real estate investing. Then we're going to discuss the unique benefits for investors. So discover how MLI Select creates a cash flow advantage even in today's market. And we're going to compare it against the traditional investing approach. Third, we're going to look at how to qualify and maximize your benefits. So is this program actually for you? That's something that is very important, of course. An inside look at the scoring system and how qualifying can give you an edge. Then we look at the hidden costs and what you can expect. So walk through for the different types of expenses and what you can actually expect to pay out the programs. There are some hidden fees and additional fees that traditional investing does not have. And then why Alberta is the perfect place for an MLI Select investment. A quick breakdown on why we love investing in Alberta real estate, especially through the MLI Select. And finally, we are going to do your roadmap to getting started with the MLI Select. This includes practical steps to begin exploring the investing in the MLI Select, including different project options. Okay, so as investors, we all want the same things. First of all, a safe place to park our money and maximize returns. Second is to protect ourselves against inflation. And third is to make more tomorrow than we could today. Now, real estate investing is as old as time itself. So if you're here, I'm sure you already have some skin in the game and know why you love real estate investing, because the MLI Select program is not necessarily for brand new first-time investors. So people are always going to need a place to live. Second, long-term wise, the market has only ever gone up. Having someone else pay your liability, your mortgage, while you further increase your equity. And then 3 paths to return. First, cash flow generated from renting. the pay down of your mortgage, and third is the long-term appreciation in value of your property. Now, there are currently some challenges of the current market. So every investment carries risk, and investors in the Canadian real estate market face several challenges at the moment. First of all, higher interest rates. Although the rates have started to come down, elevated rates have increased financing costs, taking away from your bottom line. Second is inflation and economic growth. So persistent inflation and moderate economic growth exert pressure on property values and returns. The third challenge has been tighter lending standards. So lenders continue to change their lending rules, and federal law requires 20% down minimum for investment properties. This makes it very challenging, and this is a huge advantage of the MLI Select program, which we'll get into later here. Fourth is the lack of quality projects, especially in Calgary. Property prices have soared, interest rates have been high, and it's become nearly impossible to cash flow positively without a secondary suite. Now, this is something that's also incredibly important. A lot of people we see are buying investment properties because all they can really afford, but it's not in the proper area and it's not the proper project. So that's what we're going to walk you through as well today. So with all of these issues, why are we saying to still invest in Calgary? Why are we still very bullish on investing in Calgary? Well, there's over $1 billion worth of infrastructure coming to the city, starting with the culture and entertainment district. If you look at Edmonton, what happened when they built that NHL rink? It became the life of the city. So that is something that's coming to Calgary. We have actually an entertainment district. $600 million in city building and infrastructure to date has already been built, and a lot of amazing things coming, such as the new event center. So the new event center is going to sit on 10 acres with 18,000 seat arena that replaces the Saddle Dome. It'll have an indoor and outdoor community plaza, an attached parkade, a future redevelopment site, and a lot more coming. So the downtown area is set to explode in the next couple of years. There's also a booming tech sector. So some companies are expanding into Calgary, such as Amazon. So they have the Amazon Fulfillment Center, RBC Innovation Hub, Unity Labs, which is the founder of Pokemon Go, shout out, and Tech Giant is moving to Calgary, and Emphasis, the next applied. So Calgary will be Emphasis' first Canadian headquarters, which is expected to bring between 500 and 1,000 jobs to the city and a lot of other tech companies. Now, why are these tech giants moving to Calgary? Well, first of all, fleeing high taxes. So Alberta has the lowest corporate tax rate in Canada, has the lowest land transfer tax and development charges. It has no provincial sales tax, which is huge. It has a low cost of living. So Alberta has the second lowest cost of living in the major Canadian cities and 9th in North America. Minimal red tape in Alberta. Government regulations. There's no rent control. $175 million is committed to Alberta Enterprise Corp for innovation. And then there's a lot of advantages over other Canadian cities, such as no foreigner buyer tax, minimal land transfer tax, and no development charges. That brings us to the good stuff. Now you know a little bit about investing in Calgary is diving into the actual what is the CMHC MLI Select program. So Mike, do you want to walk through kind of a brief history on the program here, and then we can go from there?
Absolutely. So if you're wondering what all these random numbers mean, CMHC MLI Select, it's quite the mouthful, but it stands for the Canada Mortgage and Housing Corporation and the Mortgage Loan Insurance Select Program.
Okay.
Yeah, it was a government program created in March of 2022, and the main intent of the program was to create and encourage the development and preservation of affordable, accessible, and energy-efficient multi-unit residential properties. Basically, the government said, hey, we want more affordable housing built, and how can we incentivize investors to do that, and how can we build more? And what it does is it provides mortgage loan insurance with incentives based on this point system that's evaluated based off affordability, energy efficiency, and accessibility. Now, here's why this program is a game changer for real estate investors, is that it's not just another program, it's a strategy for high leverage investing. And really, if you're an investor, here's why you should care about the program. It's that you can get a mortgage with up to a 95% loan to value ratio. AKA you can get a lot of real estate for as little as only 5% down. So you don't need that traditional 20% down as if you were buying a single house. And another huge benefit, of course, is you don't have a standard 30-year amortization. You can extend it up to 50 years. So all that does is result in lower monthly mortgage payments, which helps you increase your cash flow. So yeah, basically, you're able to own a lot of real estate for just a little money down with a mortgage over a longer period of time, which leads to better cash flow for yourself. So and we'll show you some of the math in a second, how it compares to a more traditional real estate property. But think of this program as just you working with the government to provide affordable housing. And by doing so, you're able to get very, very, very favorable financing terms. So let's quickly compare a traditional rental property versus an MLI Select property. All right, so what we have here is a standard half duplex. We have an upper floor, little under 1,700 square feet, 3-bedroom, 2.5 bathroom. And then we have a rare 2-bedroom, 2-bathroom legal suite down below. We're pretty conservative with our projections. This is an actual project in Calgary, and we predict that you can get about $2,500 a month for the upper floor and $1,600 a month for the lower floor, totaling about $4,100 a month. And the initial investment for this property, these bad boys are going for about $705,000 all in. That's including GST. All right, so taking a look at the numbers with that $705,000 investment, and you will need and by the time you do take possession of that property, you would need about 20%. You would need 20% down. So that's with taking into factor of $1,500 for legal fees, that's about $142,500 out of your pocket. And then assuming a 30-year 3.75% mortgage, we're filming this at the end of November. That's what the standard rate is right now. You're looking at about little over $2,600 a month for a mortgage payment and a total cash flow of about $660 a month without property management. Now, this is still a great investment, but what we're going to show you might actually blow your mind if you're not familiar with the program. Because taking a look with the MLI Select program, so instead of buying just one half duplex, let's say you buy 3. So 3 half duplexes all next to each other. So you're getting about $2.1 million worth of real estate. Now, let's actually see how much money comes out of your pocket. So what you actually end up paying out of pocket is you do need to have at least $244,000 to put down. A lot of people I'll get into this later, but you will need about $244,000 cash out of pocket, but keep in mind that that's including a down payment of 10%, and you will get refunded 5% cash on close. So after that, your total cash out of pocket is actually only $138,300. And then assuming that 50-year 3.75% mortgage, the slide here is wrong, but your monthly mortgage payment is going to be about $7,600. And all of this is resulting in a monthly cash flow to you of about $1,570 per month. So essentially, you get 4 extra rental units for $4,200 less out of your pocket than a traditional real estate investment. So yeah, taking a look at the side-by-side comparison, you can see less money out of pocket, more money in your pocket, and you own 3 times as much property. For being an accountant, I can't count right now. But yeah, you can clearly see the advantage there. Obviously, you need more money up front. We'll dive into the specifics of the program, and there's more risk, of course, carrying a $7,600 a month mortgage payment. But you know what they say, scared money don't make no money.
That is what they say. And this is so mind-blowing. If you actually look at this side by side, you literally have to end up paying less money for 3 times the amount of properties, and you have more than 2 times the amount of cash flow. So pretty crazy when you look at them side by side like this.
So you might be thinking 3 properties for the price of 1? Sounds great. Well, how do I get started? So I just want to say, like, we speak with dozens of real estate investors each week, and some are very far along in their journey, others are brand new. But some people say, like, why isn't everybody doing this? Well, and I like to say to that, if it was easy, everybody would be doing it. Because before we really dive into the nitty gritty and understand, like, you have to understand that this program isn't as simple as just calling up your favorite mortgage broker and saying you want an MLI Select property. There are costs involved, and we will be sharing all of them involved later. You, as an investor, have to meet certain criteria in order to participate in the program. The property that you're purchasing has to meet certain criteria as well. And there are certain risks involved that we will dive into a little bit later. And there's just a lot of different moving parts in the whole process that you have to be aware of in order for you to get that glorious 5% 50-year mortgage. And this isn't meant to scare you at all, but what our main intent is to educate you and prepare you to help you make the right decision that works best for you and your investment goals. And remember, while this can all seem a bit overwhelming, that's exactly what we're here for, is to help you along in every step of the process, from finding the best projects to connecting you with our MLI specialist broker, to helping you with the paperwork and ensuring you meet all the required deadlines in order and on time. So first, let's just go over some things that you need to be aware of the program, and then we'll walk you through the steps of the process, aka kind of what it would look like if you were to apply for the program and purchase an investment property. All right, so first off, we are going to go over how exactly to qualify for the MLI Select program. Ooh, we'll fade in, fade out.
Oh,
so how to qualify is there are two major criteria that CMHC is going to look at in order to qualify for the program. The first, of course, is you, the investor, and then the second is the property that you are purchasing. So you, as an investor, must meet several key financial criteria. The first is that there is a net worth requirement. So your net worth must be at least 25% of the property's purchase price. So say you were buying something for $2 million, your net worth must be at least $500,000. And then you also have to have a certain amount of liquidity. So you must have liquid capital equal to at least 10% of the purchase price of the property that you're purchasing. So again, going back to that $2 million property, you need at least $200,000 in liquid assets. And then the property itself, when evaluating the property, CMHC does use a scoring system based on three different factors, like I said before, the accessibility, the environmental impact, and the affordability. And your property score is going to directly impact how much you'll need to put down and the length of the mortgage that you're going to get, aka whether you get that 50-year 5% mortgage is largely going to depend on your property score. So our broker has told us, I'll just say this in like super easy to understand terms. She's told us the easiest and simplest way to get a super high score is going to just be focusing on that affordability factor and simply pricing your rent a certain way. And you don't have to worry about what exactly you're going to charge for rent, because our MLI specialist works with you and tells you exactly how to price your rent in order to get the best score possible, as the rents do vary depending on the neighborhood and the type of property that you are purchasing. And I forgot to include this on the slide, but you might be wondering, well, how many of these units do I have to rent affordability? It's going to be 25% of the doors that you have. So if you have like a sixplex, it's going to be 2. And if it's an eightplex, it's going to be 2 as well. But yeah, 25% of your total doors. And then the minimum property size as well. This program only applies to properties with at least 5 units. And what I mean by that is 5 separate rental units. And this can be achieved by purchasing, a singular multifamily unit, or owning or buying multiple properties all directly located next to each other. For example, having 3 separate detached homes, all with legal suites, that would be considered as well. And then your debt service coverage ratio must also be at a 1.1 or higher. And again, the good news as well is that our specialist will prepare a pro forma financial analysis for CMHC, factoring in every cost benchmark projection to give you the best shot at success. We will also do our own pro forma as well. Oh, so here's that scoring, confusing. So if you Google CMHC, I'm sure you've gone to this government website and you've seen this before. Very confusing, a little bit hard to understand. So I'll just quickly go over this. Like I said, we really only focus. Okay, so I do have it. Derp.
Yeah.
But yeah, you do. So I just said it, but at least 25% of your total doors have to meet that affordability rent, which again, our broker tells you exactly what to rent it out for to qualify to get the best terms. And then here are some other requirements that aren't exactly like front facing on the website, and that you're really only going to know by watching educational webinars such as this or connecting with the right people. Is that one stipulation of the program is that there is a property management requirement. So CMHC does require that you have at least 5 years of property management experience if you are self-managing the property, or you must hire someone with at least 5 years property management experience. And then whoever is managing the property has to be within a reasonable proximity to the property. And what really that means is just that you can get there within a day or so. And CMHC has been known to deny out-of-province applicants due to this. But for example, if you are watching this and you are in Ontario and you want to invest in Alberta, then you just simply have to mitigate this risk by hiring a local property management team, even if you do have 5 years experience yourself, because you might even say, well, I can fly there. CMHC isn't going to buy that. So it's just best to hire a local property management team to take care of it. And then here are a couple additional things to be aware of the program. Is that new builds do get preferential treatment with this program. So while the program does cover new builds and resale properties, the new builds are going to offer better terms. And you're going to, for more details on that, we can definitely get you connected with our MLI specialist because really the intent of this program, again, going back to it, is to build new affordable housing. And if you, for example, if you want to buy a home in the 1970s and completely renovate it, well, why would they give you a 50-year mortgage on a home that was built in the 70s? It just doesn't really make much sense for them because it's already very, very old, and there's just much more inherited risk there. And another requirement that a lot of people don't know of is you are expected to be holding this property for at least the next 10 years. And while there are wink, wink, legal loopholes to get around this, yes, traditionally you are expected to hold the properties for a decade. And last but not least, builders aren't going to finance your investment. So with the state of the current Alberta real estate market, builders aren't really having a whole lot of problems selling their inventory. And I know a lot of people hear of this program and they think immediately they jump to conclusions saying, oh, I only have to put down 5%. Like I said on that previous slide when I showed you the numbers, that's just not the case. Like next to no builders, we do know of some, but the large majority of builders will not accept 5% outright because they can just sell these units individually for 10% down to your average home buyer. And by doing that 5%, you're essentially asking the builder to fund your investment, which makes no sense for them. But like I said, many of them will accept 10% down and then refund you 5% on cash to close. Again, we are investing here, and no investment comes out without its own inherited risk. And right now, it's currently taking CMHC about 3 months to actually review your application, whether you are awarded the certificate or not. So kind of what this means is if you are working with a builder, no builder is going to give you a 3-month conditional period while you wait for your approval, but most are very flexible. So we can't make any guarantees that you are going to get approved for the program, but our team will do essentially every stress test and every measure of assurance possible prior to writing an offer to ensure that you have the best possible chance of getting approved.
I also want to say that this is actually sometimes even extending into 6 months. So this timing is essential, but very, very challenging as well as they're getting more and more backed up too. So that's something that our team will definitely help you with as well.
And unlike traditional mortgages, the MLI Select program does come with a number of different fees compared to your traditional mortgage. So first off, there's the CMHC fee. If fully approved, assuming you get your 5% 15-year mortgage, the CMHC is going to add an extra 2.8% on top of the mortgage. So that's not cash out of pocket, but you're going to have a little bit more on top of your mortgage. Now, the rest of the fees are out of pocket and need to be paid as you go along with the buying process. So the first is the mortgage broker fee. Our MLI specialist, our broker, our partner, she charges one of the best rates that we know of, honestly, the best rate that we've seen really in the market at a flat fee of 0.5% of the purchased property, whereas others, kind of the industry average that you can expect to pay is 1%. And we're not going to name names, but we know of some guy. It's kind of crazy how many people have messaged us about it. But there's some guy out there on the internet who's trying to charge people 1.8%, which we think is pretty criminal and just way too much. Other fees you can expect to pay is a CMHC screening fee. That's typically around $1,200 to $1,500. There's appraisal fees, which are typically around $3,000, and potentially environmental fees as well. So that would kind of bring that up to $4,500. And then there are lender fees as well. So this is going to be actually classified as a commercial transaction. And as a result, you are then responsible for paying your lenders legal fees as well as their fees as well, if applicable. So you might be taking this to a lender, and a lender might say, hey, we'll give you your financing, and they might not charge a fee, but they'll charge you a higher interest rate, or they might give you a lower interest rate, but charge you generally like a 0.5% fee, somewhere around there. And you're also, of course, responsible for legal fees. And again, like I just said, you have to pay your own, and then you also have to pay for your lenders as well. So all in all, just be prepared to budget another 30 to 50 grand out of pocket for fees on top of that down payment as well. Now, here's the big elephant in the room that I know exactly what you're thinking. What if you don't get approved? So let's go through some worst case scenarios right now. You find a property you like, you put down your 10%, you apply through the program, and CMHC turns you down. Now what? Well, your investment's going to fall back into the realm of traditional real estate, and you will need to come up with a 20% down payment at the time of possession. And unfortunately, if you don't have it, you're going to lose everything you've put into the deal so far. Alternatively, you could move into that property instead, so it's not an investment and not be subject to that 20% down. Wink, wink. But that's the gamble that you take. Like I said, there's risk with every investment. But with the right preparation, like I said, we're going to ensure that your odds of approval are as high as possible. So now that we know the ins and outs of the program, let's walk through the actual buying journey. So what can you expect? What does this process look like in order to actually buy a property? Well, the first step that generally where we start with is doing a quick self-audit to see how much you were qualified for. So really quickly, I have a slide for it. But first step, quick self-audit, see how much you were qualified for. Second is find a project that you would actually be interested in. Of course, we have a huge list of projects that we can share with you in that regards. These properties are hard to find just to begin with. And the fact that we have a list of anywhere from 15 to 20, you're off to the races already with those. The third would be connecting with the MLI broker and the MLI specialist. We're happy to make an introduction to you there. Fourth, of course, is then you found that property, you're connected, you know how much you can approve. It'd be writing an offer and making that down payment on that property, on that project in order to secure it. Then, of course, we all work together with our broker to then start the application process and apply for your MLI certificate. Now, we have to line up this timing perfectly because, like I said, applications are currently taking anywhere from 3 to 6 months in order to process. And then your application is open for a 6-month window. And within that 6-month window is when you actually have to take possession of the property. So we work and ensure that we have all these timeframes lined up, of course.
And what happens if they miss the time frame, Mike?
If they miss the time frame, then unfortunately they would have to reapply again.
Yes. So we want to be very careful there.
Which we, of course, we don't want that to happen. After you have your certificate, then your next steps, of course, is to obtain financing from your lender of choice to actually get the money for your project. And then 7 is providing the necessary paperwork on closing. Last but not least, give yourself a big pat on the back. You just got a whole lot of real estate for a little bit of money out of your pocket. So, first step, do a quick self-audit. Make sure you have the following. Like I said, the 25% and the 10% rule. So just do a really rough ballpark of what's your liquid capital. And again, like your liquid capital, of course, being cash equivalents, or assets that can easily be converted to cash. So, your cash, your stocks, your cryptos. Probably don't want to sell your Bitcoin. Maybe cash out some of those mutual funds instead, your savings, etc. Divide that number by 10. That's the property that you can afford. In conjunction with your quick net worth self audit. No, so I didn't have that. I forgot to write that down. But for your net worth audit, take a tally of everything you own, your bank accounts, your cars, your houses, everything you own. Take off everything you owe, your mortgages, your loans, your credit card payments, etc. That's your net worth. Divide that by 0.25. That'll also tell you how much you can afford. Take the lower of those numbers between the liquidity and your net worth. And the next step, of course, is finding a project that you like and, of course, financially makes sense. Like I said before, these projects aren't easy to find. There isn't exactly an MLS for the MLI Select program. So finding these projects just to begin with can be rather difficult. If you do have a realtor, just make sure they are well informed with the MLI process. It can be difficult to find 5 doors in a rentable area. So be sure to find someone who is well connected. Alternatively, you can reach out and partner with us where we maintain that active database that I've alluded to of current MLI projects. Like right now we have somewhere between 15 and 25 different projects between Calgary and Edmonton, and all of those come complete with our financial analysis. And feel free to reach out after this presentation to learn more about working with us. And here's a sneak peek at some of the projects that we have in our roster. So we have a number of different property types to choose from. And here are some of the top MLI Select project types. The first is detached homes with legal suites. So really what we do here is we have a number of different separate single detached homes that are all side by side next to each other on adjacent lots, with all of them having legal suites down in the basement. So you need at least 3 of those with the standard legal suite in order to qualify for the program. We also have townhomes with legal suites. So think of a series of 3 townhomes with the 2 end units having basement suites down below. Of course, that middle one, it's a townhome. There's no separate entrance, so you can't put a basement suite there. So yeah, that's another 5-plex option we have there. The third option, of course, is duplexes with legal suites. So you do need to own 2 full duplexes here. CMHC is not a fan of the half duplexes. So think 4 units, and with the legal suites down below, that gives you 8 units in total. And then this is more so up in Edmonton. Calgary has a little bit different restrictions. So up in Edmonton and smaller towns around Alberta, you can actually have more than 1 rental suite on a property. So some of the options we have as well is think 2-lane homes with basement suites and then detached garages in the back. And then there's also a garden or garage suite above the garage for renting out as well, too. Give me a total of 6 doors across 2 different properties.
These are actually incredible investments too. We like the ones in Edmonton's are beautiful, those garage suites too. So very good opportunity for those.
Yep. And last but not least is, of course, like your more traditional multifamily apartment. Think of it just a commercial property with at least 5 units in it. So as you can see, tons of different options to choose from. We do have a full inventory of all different property types. So just reach out for access after this presentation. And we've already shared that one. So let's actually move on. And let's move on. Third step along in the process is to connect with an MLI specialist. So if you already have an MLI broker, then you're good here. If you don't, this is another benefit of partnering and working with us is we do give access to our clients to our MLI broker who has processed literally hundreds of these deals. And like I said, as a bonus, she only charges 0.5% for a broker fee when that industry average is around 1%. And we can move on past this. But like I said, there's some guy out there trying to charge 1.8%, which we're not big fans of. So you might be thinking, well, why do I have to pay a mortgage broker? Like I didn't pay a mortgage broker for my house. Well, like this isn't just any mortgage broker. And when you first connect with your MLI specialist, they're going to walk you through the whole ins and outs of the program on top of like what we're discussing here. And they're going to ask you to submit a lot of personal documents up front to get that information on your net worth and liquidity and do an assessment there to see really what you can qualify for. And then from there, you work with the MLI specialist, you work with your realtor hand in hand, and they're going to guide you along each step in the journey. And we've filmed this webinar. We do our best to stay up to date on this program, but it does seem to change quite a bit. And our MLI broker is the number one. People see us as experts, but they are the real experts that are like actually plugged into CMHC. And they're going to be the default person to really ask for the really intricate questions about the program. So again, you got your broker. They've told you what you can apply for. You have the property. And now what you're ready to do, you've passed the test. So really your next step is to write an offer on the property. And with most builders, it depends, but you can expect to pay $1,000 for a refundable deposit. And then you enter that conditional period. And then during that time, the conditional period, you really choose whether to proceed with the purchase of the property or not. And like we said before, at the end of the conditional period, you're going to make your down payments. And most builders, again, they're going to accept the 10% down with the 5% on the refund cash to close. So after you've made your down payment and you're past the conditional period, it pretty much becomes a waiting game and a game of timing. So during this time, you're going to work with your MLI broker. You're going to start gathering assets for the application, such as your appraisal, paying those fees, etc. But you won't actually submit your application until the time is right. It does take CMHC, again, anywhere from 3 to 6 months to review the application. Assuming you're qualified, that application is good for only 6 months. So really, we figure all this out ahead of time and plan with those windows of time to make sure that you wouldn't have to resubmit the application in the event that it passed the 6 months. With that MLI certificate in hand, you're going to work with your MLI broker and start shopping with your lender of choice to get financing for your investment. Like I said before, some lenders are going to potentially offer higher interest rates with no fees, or they might offer a lower interest but charge a little bit of a fee. And you'll work with the broker to find financing that works best for you and ensure you're still hitting that DSCR threshold. So with possession day around the corner, again, you're going to be working with all parties involved. Now we bring in a lawyer into the fold to make sure everything is in order. Your lender is going to transfer over funds to the builder, and then the lawyer will prepare the closing paperwork. And with your MLI certificate in hand, you will receive that 5% refund on the original down payment cash to close. So celebrate, you did it. Give yourself a huge pat on the back. You are now the proud owner of 5+ rental units and own a lot of real estate for only 5% down out of your pocket. So really the next steps, let's get some tenants in there.
Yes. Now, the final thing too is this for you? So this investment program is not for everybody, as you can clearly see from what we just covered there. It's for action takers only. Clearly, you can see the allure of the program, now the risk versus reward and the risk of the reward that comes with it. So we're continuing to see more and more investors learn about this program, and the natural rise in demand is a result of that. These MLI Select opportunities are rare compared to your traditional real estate, and inventory moves extremely quickly. So if you're looking for a team to find you an incredible real estate investing opportunities through the MLI Select program and hold your hand every step of the way throughout the buying journey, then reach out to us. We got you. We're currently looking for 3 qualified investors to help with their portfolios. We want to help 3 people build a portfolio. We have a number of projects ready to share, with many of them being only one available unit or set to sell. Okay, so a lot of the builders are just building single MLI Select projects strictly for that one investor. So if you are ready to go, please reach out to us. Now, the catch with this is we're realtors too. So if you're currently in an agreement with another realtor, well, we're sorry, but we don't want to step on anyone's toes. We legally are not supposed to work with anyone who has a realtor already. So we have to make that very clear up front. However, you could get your realtor to reach out to us and we can work with them on the deal potentially. Okay. So here's our team below. Yeah, feel free to reach out. And finally, your next steps are to book an investor's consult call below this video. On that call, we're going to learn more about your investing goals, see if you'd be a fit for the program, and share with you our current selection of MLI investing opportunities, complete with full financials. Again, we're only working with 3 investors right now, and inventory is extremely low and limited. So don't wait and book your call below. So while there's 15 projects, 15 to 20 that we do have, there's some incredibly exclusive ones and more rare ones that we want to share with the right investors here. So let's book a call, see if we're a good fit. And thanks for taking the time to listen to our presentation here.